Kitco Mining special coverage of the Mining Forum Americas is brought to you by Metallo Royalty and Streaming.
Goose is ready to fly for B2Gold. Hello and welcome to Kitco Mining with me, Paul Harris, here at the 2025 Mining Forum Americas in Colorado Springs. And joining me now is Clive Johnson, President and CEO of B2Gold. Clive, welcome back to Kitco.
Paul, good to see you again.
Likewise. Let's start off with Goose. That's very much front of mind. You put a news release out last night about the Goose development in Nunavut in northern Canada. That's nearing its closing stages. You've poured first gold, it's in production, and commissioning to full ramp up is nearing completion as well. You put a news release out last night. You're using supplemental mobile crushing capacity at Goose, modified the production guidance there for the third quarter. What's going on at Goose, Clive, and why this news release last night?
Well, Goose is doing a very well ramp up. You know, we build mines very well. That's the history of B2Gold. So we've done it again in very difficult circumstances in terms of what we have to do there to get everything on site. Logistically, it's a real challenge, but we've met it very well. So as you mentioned, we had the first gold pour at the end of June, and now we're looking at commercial production in a matter of a few weeks. We're expecting now it's commercial production. So it's gone extremely well. The mill is running well up to nameplate. All the other parts of the milling operation are running extremely well. The one issue we've had is in the actual primary crushing of ore, the crushing circuit. We basically had some issues with some of the pre-design that was done by a previous owner, and it wasn't up to what we would normally do. But we've had a really good solution to it in the short term. So we have a few things to do on the crushing circuit to get it up to a B2Gold type of standard. But in the meantime, we have a portable crusher which was on site. We brought that mobile crusher to the front end of the circuit and are using that to do the first stage of crushing. So we can run it at nameplate without having to fix this crushing issue. Over a period of time, we'll engineer it and we'll fix the crushing system. But in the meantime, it's not just a workaround. In the meantime, this is a really good solution to the problem. So ultimately, the fixes to the crusher are very minor. They're not big expenses, and we don't have to bring in big equipment to fix it. So that's what we thought. We'd put the news release out because we pride ourselves on being transparent, and we wanted people to understand why we produced some less ounces. Not a lot, but not a lot less, but less ounces in Q3. On track for guidance in Q4 and for next year and beyond from Goose. So 300,000 ounces a year is going to be the average production for the next 6 years. We think along further than that. We have a 14-year mine life on a conceptual basis and looking at the potential. So Goose is doing very well. It's on track, and we're extremely excited about this new project in Canada. You know, geopolitical diversification is something we wanted to do. It's a great project. Plus, the exploration upside's got us very excited.
Excellent. As you began the development of Goose, you advised the market that you're going to have to do more work to make it a B2 mine to the quality and level that you'd want it to be, and that would take a bit more money, that would take a bit more time. So as you're coming to the end of the build process, what's the final CapEx price going to look like on that? Yeah,
we had to increase the capital cost, as you mentioned, because of the different design that was done by the former owner. And they were a company that was not a very strong financially, a single asset company. And, to their credit, they did a lot of things, good things in exploration, in permitting, government relations, and local relations in Nunavut, which is all very important. At the end of the day, though, we had to increase our capital cost to get up to $1.5 billion Canadian. And that was to, redesign some factors. We changed the schedule by 3 months from what Sabina had advertised. It's, I think, really a statement to our people, our construction team, that we were able to have only 3 months in the schedule change. Some companies would have come in and said, okay, we need another year or two. We came in and said, we can do this. But it was, we talk about sort of trying to fly the airplane while you're fixing it at the end of the day. But that's gone extremely well. So we're on schedule, we're on budget for the new capital cost estimate. And of course, we've realized in commercial production, as I said, in a matter of a few weeks.
It's a great time to bring a new project into commercial production with gold at $3,600, $3,700 US dollars per ounce. At these sort of gold price levels, what does that do to the payback time for Goose?
It reduces it. We're probably looking at around 2 years of payback for Goose right now.
Okay. Now, you have a large land package at Goose, or Back River as the broader project is known. What's the exploration plan there to find some more goslings in the future?
Well, we're very excited about it. You can tell because we have a $64 million U.S. budget this year for exploration corporate-wide. $32 million of that is being spent at Goose, at the Back River area. So that's half of our exploration budget for the year. Tremendous targets. This is a remote project, so it wasn't really very well explored, and even though it's been around for a long time. So Goose was seen as the primary target, which that's the main deposit. All of the veins in Goose are completely open to depth, so a lot of potential there. But now we have about 12 targets identified. It's an 80-kilometer belt of banded iron formation, the kind of rocks that you expect to see the potential for these types of deposits. So that's going to be an extensive program of both some infill drilling to turn inferred into indicated, which we have a track record of doing that very successfully, but also looking at these other targets. So we've had some pretty sexy results this year, more coming in, so we're very encouraged by that. And that could not only potentially, if you wave your arms a bit, not only extend the mine life with Goose, is there a possibility to ramp up the mill, also maybe build a second mill somewhere down the road, but we'll see where we get to.
I was going to ask you this question a little bit later on, Clive, but let's bring it in now, because high gold price, high cash flow, perhaps give you other capital allocation options that you perhaps wouldn't have been considering at the start of the year. So in terms of Goose and the exploration, $32 million this year, the high gold prices give you the opportunity to increase exploration, to really ramp that up, to really be able to try and advance some of these targets quicker than you previously considered?
I mean, I think, good question. I think next year we'll probably increase the budget for exploration at Back River. Not really gold price related per se, but just because we're a growth company. So we've always, we've done things like when we're building a mine, we explore. Many companies don't do that. They build a mine and they'll only start exploration after they've successfully proven the mine. We believe in exploring all the way through the piece, so we can faster ramp things up or potentially look at optimizations, which we're looking at the mill right now. So it's not gold price driven, it's just who we are as a company. We're a bit of a hybrid company because we're very good at building mines, running mines, all the ESG stuff we do, but we're also a very good exploration company. You don't always see that combination in producers, so we're continuing to be aggressive, never reckless, but aggressive in these things we pursue.
Okay. You've also been getting some good news at Fekola, where you've received a permit for underground mining. You've got an exploitation license there that enables you to sort of truck ore, which we've talked about in the past. What do these aspects do for the performance of Fekola going forward?
Well, we're finally at the point now where we believe imminently we're going to get the permit to go and start trucking ore. So that's a very important part of our growth profile. So at Fekola, we have the main Fekola mine. We've just gone underground, as you mentioned. We just got an underground permit from the government. And the market's kind of missed that's a really important signal that the government and ourselves are on the same page. So we're talking about starting shortly. We expect to get this permit to truck ore from 20 kilometers away. The roads are built, we're ready to go, and it's a very low capital cost initiative because we don't have to build another mill. So that'll add 180,000 ounces a year to our production profile, which when you add that up with Goose, that's a pretty dramatic increase in production for the company in the near term. So the government's turning a page, and I believe in Mali, they wanted to bring in a new mining code, which they did. Took a long time to kind of get there, negotiations back and forward. But we've always had an excellent relationship with the government of Mali through all the different governments that we've seen. And I think it comes back to a cultural, you and I've talked before about treating people with fairness, respect, and transparency, and delivering on the promises you make. The Malian government holds us up as the gold standard for gold miners. So I think that's a real positive. That's one of the reasons we've had successful negotiations with the government. The Fekola mine is still under the 2012 mining code. The regional is under the 23 code, which has a bigger ownership for the government. But because we're just trucking ore, the economics are still robust in that situation.
Sticking with Mali, I mean, maybe the market hasn't really understood the implications of these announcements about Fekola because of the broader sort of country risk aspects that are in the news. How confident are you, I mean, in the relationships you have with the government there? Because other companies in the country have said they've had great relationships with the government of Mali for more than a decade, and things haven't necessarily worked out too good for them so far. How confident are you that you can sustain that positive working relationship with the government?
Well, I think very much so. I mean, at the end of the day, it's important to know that we didn't lose a day of production through all this government change, through the new government coming in after the coup, which was, by the way, a peaceful coup. It wasn't a military battle for control of Mali. But we're very confident the relationship is going to continue. In fact, I think it's strengthening. So now we can all turn the page. Recently, the Prime Minister, when Bill Lytle, one of our senior execs, was down there in August, he asked if we would have a joint press conference to announce the fact that we're moving forward with expanding the Fekola mine. So when you hear that from the top level of government, and they wanted it to be public, that's a great sign. So there's been a lot of noise. You know, the elephant in the room is barracks issues, which they have in Mali. But that's a bit of an outlier situation. The other foreign investors in gold mining have all done a deal with the government, of course, including ourselves. Ours was last August. So we're fulfilling our part of that agreement, the government, by getting us the underground permit. and now giving us shortly the permit to truck ore. The government's living up to the agreement. So they want more foreign investment in gold mining. The fastest way to get some more revenue from gold mining is get us that permit. Because of the 180,000 ounces of new gold production, a third of that, for 35% of that goes to the government. So we're on the same page with the government of Mali, and I think the negativity has been way overdone. So, it's been a positive place since we got there in 2014. And yes, there's been some issues to deal with along the way, of course. But we've come out of it with the government happy with us, and we're happy to work in Mali.
Now, we're here at the Mining Forum Americas, Clive, and yesterday you participated in a panel about Mali with Peter Moroney, President and CEO, or Executive Chair, I can't remember exactly what, of Allied Mining, Allied Gold, and the US Ambassador to Mali. What were some of the things you were talking about and discussing on that panel?
Well, I think it's positive, very positive scenario. And the minister, who's very impressive, she's talking about getting Malian business people coming up to the United States, but North America, but at the same time, she's talking about getting more companies, U.S. companies involved in Mali. And I think this is part of the new administration in the United States, which is looking to get more involved with countries such as Mali to fight terrorism, because it's the same terrorist group that the United States is looking to fight everywhere in the world. So there's a positive from the security of Mali point of view in that regard, if that's followed through on. And she sounded very convinced that was going to happen. But the business side is very interesting. The United States has missed most of Africa for quite a long period of time, frankly. So now if they're going to turn their money into Africa to invest in mining and other things, oil and gas, etc., there's a real positive way forward. So refreshing to see an important American official being so positive about Mali. So she wanted to come up here and say, what is the situation with Barrick? Are you different from that? And before she went out and really promoted the idea, I think she got a good answers to the questions she wanted, and it was a very encouraging session that we had with her.
Excellent. So Goose is coming into commercial production. You're getting your permits for Fekola. Next up for B2Gold is perhaps the Gramalote project in Antioquia in Colombia. You put a feasibility study out on that project over the summer. What are you looking to do there?
Well, the key about Gramalote, we've been involved in it for a very long time. It was a 50-50 joint venture with AngloGold Ashanti. So you've got two significant producers involved in a project. Well, therefore, you need it to be big. So you need 350 to 400,000 ounces a year of production to make it worthwhile for the two producing gold companies with that. So over time, a ton of work's been done on this thing technically. There's no more drilling to be done. It's ready to go. But at the end of the day, the big thing that happened is we bought out HA. So we now own 100% of it. So we don't have to go with the biggest throughput. We can actually downsize and produce 240,000 ounces a year for a good long 14-year mine life. So that's a really solid project. The economics in the feasibility study, which is very current, just very recently came out, they say $750 million in capital cost to build it, but low and all sustaining costs of less than $1,000 an ounce on 240,000 ounces a year. That's a good project. It's a very solid project. So at $2,500 gold, it looked very interesting. At these gold prices, of course, it's a dramatically better project. So we own it. We don't have to buy it. We don't have to find it. So obviously, from our point of view, as a growing company, as a growth company, it's a very attractive part of it. So if you look at Goose, 300,000 ounces a year, another 180,000 ounces coming out of Fekola, plus potentially 240,000 ounces from Gramalote, there's your 750,000 ounces of new production to B2Gold. I think we're going to see the impact of that on the market here in the short term. But we have a great growth profile. 2024 was a difficult year. Now we're back to doing what we do well, which is growth through gold production, through construction.
With all those positives about Gramalote, what's the investment timeline there?
Right. Well, we have a permit to mine at a much larger scale, actually. So we're going back to the government to modify the permit, but a reduced footprint, smaller project. I'm very confident the government's going to approve the permit. It might take 9 to 12 months to get the permit, the new permit. But in the meantime, we're doing things like various things to advance the project, resettlement, all those things. We're well advanced on a lot of those things. So at the end of the day, let's say a year to get the permit, and then a production decision, a development decision, which right now I can't see any reason, unless something changes, why we wouldn't make that decision. And then probably 30 months to build the mine. Another really solid project for B2Gold.
Now, in terms of your sort of performance, you've been producing at about $1,500 per ounce all-in sustaining cost, giving you a margin of more than 50%. However, your market performance seems to have been lagging that of some of your peers. And when you sort of stack up companies by market capitalization, a couple of companies have leapfrogged over B2Gold over the past quarter or two, including Kitco Mining, which has jumped above you, even though it produces, let's say, roughly half the amount of precious metals that you do. Is it frustrating to be losing ground on some of your peers that way?
Well, it's been very frustrating. I use the hockey analogy that we've been in the penalty box and everyone else is scoring goals. At the end of the day, we want to be out of the penalty box and scoring goals ourselves, and I think we're getting there as we speak with the positive development of Goose, the other things that we've talked about. So I think we have a lot of catching up to do, and I think you'll see that in the market. It's already started a bit here. We were $4 not that long ago. We're now been touched $6. So I think, according to mining analysts, there's a long way to go positively. And we're ticking off a lot of the risk factors. Goose, whenever you build a new mine, there's a lot of concern about, even in B2Gold's hands, so how well that's going to go. It's gone extremely well. So that risk is removed. Now we're going to get this permit very shortly on Fekola, removing that risk as well. And Gramalote, we've de-risked that. So we've de-risked everything we're doing. And I do believe that it's going to be reflected in the marketplace. And I appreciate the patience of our shareholders, because at the end of the day, we had to re-guide in 2024 for the first time ever in the history of this company, re-guide our production, because of some of the Fekola issues. These are equipment issues. These are solvable issues. So all the mines are doing well, and here we go in the next phase of growth through B2Gold.
You also cut your quarterly dividend from, 4 cents to 2 cents. In this gold price environment, you keep it at 2 cents? Are you looking at potentially getting it back up to 4 cents or something else?
Yeah, we'll definitely keep it where it is. The reason we cut from 4 to 2 is just we had a lot of capital expenditures, so we wanted to make sure the priority of spending capital was to build Goose, etc. But even at 2%, we're kind of in the upper end for gold mining companies. But we'll revisit that, and we're going to start seeing some incredible cash flow coming from this company, especially if gold stays where it is. So as part of the looking back, we've initiated a purchase of our own shares program for that. But also we'll be looking at the dividend and quite possibly looking to increase it. Obviously, you've got capital allocation for Gramalote. We could build Gramalote out of 6 months of cash flow if we chose to do that. We also have a lot of access to different kind of financing. So at the end of the day, dividend policy is important going forward. And I think I wouldn't be surprised if we increase the dividend as well.
Another element of capital allocation, and again, looking forward to potential future pipeline, you continue to invest to maintain your stake in Snowline Gold. What is your strategic investment strategy vis-a-vis some of the juniors out there?
Well, what we're looking for is really good projects and really good management. So Snowline's a great example. We recognized Snowline very early on for what it's becoming, a world-class gold deposit. So we got involved at $3 a share, became a 9.9% shareholder. But we're a very friendly shareholder. I have great respect for their management, what they've done. It's a great story. And yes, we do talk to them every once in a while because they want to pick our brains on certain things, but we don't have any hooks in them. We've owned 9.9%. We've decided to continue to maintain that level. We'll see. Part of the reason for investing in these juniors is maybe down the road, if they want to do a deal with a bigger partner, we might be a candidate to do it. There's no guarantee. In the meantime, though, the worst case scenario is we're making a lot of money. So our portfolio of investments in juniors right now sits at around $350 million US. So in our business, you don't really care where the money comes from. Obviously, most of it comes from mining, but if you get a situation like that, so we'll continue to look for those situations. And companies like the B2Gold, good housekeeping seal, as we're, I think, a very respected company in exploration and everything else. So to have B2Gold as a significant shareholder doesn't hurt a junior when they're out telling the story.
Now, another junior which you might be making money on. Earlier this year, you told me that you're looking to divest your 70% interest in the Helmi joint venture in Finland. It seems the other two juniors involved in and around that can't come to an agreement. Your 70% is worth a lot more today than when you tried to do a deal with, I think it was Rupert Resources in 2024. What's your view of what's going on there? Is your view of B2Gold's role in that changing as we're in a much higher gold price environment?
Yeah, I mean, obviously there's three counterparties in this deal, so it's not so simple. The deal should have happened over a year ago, frankly. So we're definitely still interested in participating in that deal. And you're right, it's worth more than it was a year ago. But, we'd like to get on with it and get that deal done. And, Orion and Rupert and ourselves, there's a deal to be done. And frankly, I really think it should have happened some time ago. But at the end of the day, it makes a lot of sense, and I'm confident that will likely happen. It makes a lot of sense for Rupert and Orion and ourselves.
Is it a situation, Clive, where you as the sort of major company sort of roll up your sleeves and get them sitting down and say, come on, we're not leaving this table until we've hammered it out?
Yeah, there's elements of that. Let's say that at the end of the day to try and, Rupert, there's a lot of respect for what Rupert's done. They've got a really good deposit. This is one where you want to get in the room and say, okay, let's get this done. So hopefully we're approaching that situation. I'm hoping in the next not too distant.
Okay, well, let's use that as a trigger to talk more broadly about the market and some of your perceptions about what's happening with higher gold prices. Finance is becoming more readily available to all manner of companies. So perhaps it starts begging the question, how close are we to someone buying or building the marginal ounce too far?
Well, I think this is a fascinating time because in the history of our industry, when gold made a big move, you got into what I call the silly season, where companies were paying far too much. And at the end of the day, the cost didn't matter for acquisition. It was just growth at any cost. So at the end of the day, I'm hoping that the gold industry has learned a lesson from that, and we're not going to get back into this silly season again. But one of the things I find fascinating about M&A, and we're not interested in any M&A right now because look at our portfolio project, look at our growth profile from existing assets. The only kind of M&A we might look to do as we get into 2026 and beyond, potentially, would be looking at adding production. If you're adding production, it doesn't really matter about the gold price because both companies are benefiting from the gold price. What I'm really interested to see is when companies now have a project and they're going to put the for sale sign up, the seller's going to want the spot gold price to be used in valuations and to sell it. What are the buyers going to want to use? What are they going to use for a gold price? Is it $2,500, $2,800? No deals will get done in that regard. When are the companies going to step up and start using a much higher gold price for acquisitions? That's going to be interesting. Does gold have to be here for another 3 months, another 6 months? What's that time frame? So I think that'll be an interesting signal when we're getting into significant M&A again. But a year ago, when a lot of companies were putting up their hands saying we're for sale, now they're kind of pulling their hand down and saying, well, maybe not. No one wants to sell an asset when gold is moving significantly. So it'll be interesting to see. There's challenges ahead for M&A in the sector.
Well, that also suggests that premiums will have to increase to be able to get the signature on the dotted line. You may not be interested at the current moment in time, Clive, in buying other companies, but given how your valuation has fallen relative to peers over the past year or so, are you looking over your shoulder? Are you worried about people coming for you?
Well, I think the same things that have kept us in that penalty box of perceived risk in Mali and also getting the Goose Mine up and running, those are probably the reasons why, frankly, no one's really had a look at us because they're looking at the same risk factors. So the reason why the market has not moved our stock to the levels of other producers are the reasons that we've talked about. At the end of the day, I think those are the same things that are a bit of a poison pill for us. So, we don't believe in entrenched management. We agreed we didn't want to do it, but we took a deal to our shareholders when Kinross made an offer to buy B2Gold back in the day in 2006 for $3.5 billion. So I don't believe in entrenched management. We work for the shareholders. But at the end of the day, I think a lot of our shareholders want to be shareholders of B2Gold. They respect the history of this company. When we started 15 years ago, we had no gold production. Here we are at 1 million and growing beyond. So I'm confident that our shareholders, you'd have to make a very serious offer with a very high premium to be looking at B2Gold, and I don't think our shareholders are that interested in that from what I hear today.
Well, from what you've been telling me during this conversation, Clive, as soon as the industry sees this video, they're going to realise that those poison pills aren't there.
Well, the poison pills are going away for sure. They're being consumed, and it's a very positive outlook for us going forward. I can't control what others in the marketplace do, but at the end of the day, we are fully committed, as you can see, to growing B2Gold in a new phase of growth here.
Excellent. Well, congratulations on bringing Goose into production. Look forward to hearing more about the development projects as time passes. Clive Johnson, thank you very much for joining us today.
Thanks, Paul. Pleasure to be with you.
And we have a lot more to come from the 2025 Mining Forum Americas here in Colorado Springs, so hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining special coverage of the Mining Forum Americas is brought to you by Metallo Royalty and Streaming.